Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Porter generates returns of over 1,200 crore rupees for Peak 15, which recently exited its investment in the firm. Reports suggest that the exit marks a 11 times return on the 116 crore rupee investment made across multiple rounds by Peak 15.
Disposable hygiene firm Nobel Hygiene bags $20 million from Neo Asset Management. Proceeds will be used to increase the firm's penetration in adult diaper market and expand its distribution network.
Shiprocket launches India's first MCP server for e-commerce shipping. AI agents can now create, track and manage shipments with just one command. Enables businesses to automate logistics with natural language commands.
Fortnite goes offline on iOS globally after Apple blocks a relaunch attempt. Epic Games says the game will remain unavailable on iPhones until Apple lifts the block. Move comes after Epic tried to reinstate Fortnite on the US App Store following a court ruling on in-app purchase commissions.
Plagued with lawsuits and allegations of harming users' mental health, TikTok to launch an in-app guided meditation exercises and other well-being features aimed at young users.
Those were the headlines that we're tracking for you this evening. But on What's Brewing today, 91 Trucks, a full-stack platform for used commercial vehicles, has just raised $5 million in a Series A round led by Arkham Ventures. The startup is betting big on India's booming logistics sector, aiming to transform how small fleet operators buy, finance and manage used trucks. With plans to expand its physical footprint and double down on technology, 91 Trucks is positioning itself as a key player in a $50 billion market. Joining me now to discuss this further is Siddharth Sharma, the co-founder and CEO of 91 Trucks. Siddharth, thank you so much for taking time out and being here with us on Startup Street. You know, you've described this as a full-stack platform for used trucks, right? If you could sort of break that down for us and what it means for a used truck buyer in practical terms, and sort of explain to us what you have on offer?
So let me give you an overall perspective of what 91 Trucks is all about. We started 3 years back. The larger aim was to have a platform where people can not only research about new commercial vehicles, but also get a very trusted platform where they can actually go and research and buy and see different types of used commercial vehicles as well. Today, this segment is pretty much broken. We don't have a used, if I may say so, structured dealer who sell a trusted vehicle to the retail buyer whom we are actually targeting at, right? So we have two set of buyers. We have a fleet operator who typically runs a fleet of 5 to 8 vehicles and he wants to expand his business. And we are also targeting a DCO, a driver cum operator, which is a very big segment now because as we all know, this industry has seen a significant growth of load aggregators and last mile mobility, where there is a lot of business being generated. And these drivers today have an aspiration of becoming a micro entrepreneur. And this is what 91 Trucks is all about.
Right.
Platform, yeah, go ahead.
Yeah, and if, we'll get into further details about what the company exactly does. But if you could, sort of tell us, you've just raised this $5 million in a Series A funding. What are the top priorities that this capital will be deployed towards?
So there are two things on which this capital will be used for. One is we would be doubling down on our retail outlet footprints. We started only being available in Delhi-NCR when we started this business 3 years back. But now you would see us expanding across different parts of India, including west as well as east part of the country as well. The idea is to have, as I said, the pan-India presence. And also we would getting into a new set of businesses as well. For example, we would be getting into the financial segment of the business as well, because commercial vehicle used finance is a very important enabler for anyone who wants to become a micro entrepreneur and own a used commercial vehicle.
Right. And, you're also targeting 10,000 annual commercial vehicle sales over the next 3 years, right? So what's the roadmap to get there, especially in tier 2 and 3 cities?
Look, the way we are envisaging this whole business is today, if I talk on numbers, close to 1 lakh commercial vehicle gets sold every month. And we believe 1.5 to 2x of used commercial vehicles are being transacted every month. Today, this entire transaction is pretty much unorganized. So as we build up in the next 3 years, one priority would be to build 91 Trucks as a brand, where we would want anyone who wants to get into building his own business, or any DCO or fleet operator who wants to buy a used commercial vehicle, which would be a trusted mark by us, finance, RTO, end-to-end full stack model. We would like to be in that space in this market.
Right. And, you also pointed out that expansion, especially to other parts of India, is also on top of your agenda. But also, you're looking at offline expansion as well, right? Yeah. You're looking to add about 20 new stores. How will this play a role in strengthening your customer trust and driving sales? And how soon will we see these stores open?
Look, used commercial vehicle is a touch and feel product. This is not a luxury product which you buy. You basically buy a commercial vehicle because it in a way supports your livelihood. So a lot of transaction for us happens offline. As we open new stores, as you rightly said, today we are 7 stores strong, but in the next 2 quarters, we would be in a range of opening another 15 to 20 more stores. So by the end of this financial year, in the first H1, we would be probably in a range of 20 to 25 plus stores.
Right. And access to affordable financing is a key pain point for small fleet operators. So how is 91 Trucks 91 Trucks' financing platform sort of addressing this gap? And what makes your offering more accessible or flexible versus the traditional lending norms?
Look, we are if I may put it, we are a marketplace. So what we have done is we have tied up with across banks and NBFCs. So we have we would have a range of banks and NBFCs being partnered with us in terms of understanding the profile of the user, basis which we are being able to provide loans to every aspect and every profile user who comes to our store and who has an aspiration of buying a used commercial vehicle. The other pain point in this segment has been the documentation. And that is why when we started this business, we were very clear, we want to have a full stack model. Not only we do loan for the user, but we also give him the assurance of the entire paper transfer, which is very important when one wants to run his own business or run a commercial vehicle on the road. And the biggest enabler, we believe, would be our warranty scheme, because once you take a vehicle from us, our relationship doesn't end there. We also give you a warranty product, wherein if tomorrow, once you are on the road building your own business, if you face any kind of problem, we are there to support you and help you.
You've also said that, you all have seen 8 times revenue growth over the last 2 years. What has been driving this momentum? Can it be sustained post the funding? If you could tell us what your targets are for this year and where you hope to end this year?
Just to give you a broader perspective of where we are and what number we would like to end, this financial year, we would be in a range of 100 odd crores. With an exit ARR of approx 180 to 220 crores. As you rightly said, our revenue has grown by 8x, and a lot of it is being fueled by a lot of references which we are now getting from the market. Because as I said, every user who buys from us is our reference point. He is actually promoting 91 Trucks to his colleagues, to his friends, to his industry. And this is where we want to double down as a brand, which would have a lot on trust as we build this business.
Right, absolutely. And if you could quickly tell us, how do you plan to differentiate, as competition in logistics tech and used vehicle platforms intensify? If you could quickly tell us that.
Look, today, commercial vehicle as a segment hasn't seen the level of growth which we all have seen in used car as a segment. We believe this is a complete white space where people are looking to have new technology in terms of researching as well. So we are building a lot on the AI technology, where anyone who wants to buy a new commercial vehicle can come on our website, and we would give them the exact information based on the kind of work you want to do with that commercial vehicle. Apart from that, access of loan online. I think as the evolution in this segment would happen, a quick loan will be a reality in this segment as well in the used space. And this is where we would like to work with banks and NBFCs and create a product where anyone who wants to own a used commercial vehicle can get a loan in maybe 10 minutes.
Oh, all right, Siddharth, we're completely out of time, but thank you so much for joining us on Startup Street today, and we wish you all the best on your journey going forward.
Thank you so much. Pleasure being there.
All right, moving on. On the hot seat today, we have a startup that is giving the humble samosa a bold new identity. From science labs to snack counters, Samosa Singh is redefining Indian street food one crispy bite at a time. With a growing footprint across India and fresh launches in Delhi-NCR, this snacking brand is on a mission to become India's snack king. And to tell us how, joining me now is its co-founder, Shikhar Veer Singh. Shikhar, welcome to Startup Street. Now, you already have a presence in Hyderabad, and now you have launched new outlets across Delhi NCR. What's your broader vision for this market over the next year, and how many more stores are in the pipeline?
See, India is a big country, and to just give you a number, that we sell about 6 crore samosas every single day in India. So people do that. So there is a huge appetite for samosas across India. So currently we are present in 4 states: Delhi, NCR, Hyderabad, Bangalore, and Chennai. And this year we'll be focusing majorly in these areas. We want to go deep down in these and saturate the market, and then go to the other cities. And we'll be opening roughly around 50 to 60 more stores this year. So doubling down from the current count of 50. So we'll be reaching about 100.
All right, so 50 to 60 more stores by end of this year. Shikhar, you described Samosa Singh as a brand offering guilt-free indulgence. Tell us, how are you reimagining the traditional Indian snacks for today's health-conscious consumer?
See, I always believed, traditional Indian snack has always been a healthier option if done in a right way. Because I still have my memories from where grandmother used to prepare and we used to enjoy. And see, this snack has been in the little, bad limelight just because it is unorganized right now in India, and it is being prepared by the street food vendor, where they don't put major effort in, maintaining the health perspective or taking on the good quality checkpoints in the, sourcing of the material. But at Samosa Singh, we have taken a very well, on these quality checkpoints. So we, like, just for example, using, employing a no palm policy. So we use only sunflower oil in all our products, and sourcing the material from the right places, from the right vendors, that procuring vegetable from the farmers. So all these steps help us maintain the consistency, hygiene, quality in the product. Plus also we have a ISO certified facility in Bangalore where we do.
Okay. All right. So, Shikhar, samosas are deeply nostalgic, and, like you mentioned, you've successfully modernized them along with a diverse menu of chaats, kachoris, and more. How do you strike a balance between innovation and tradition, and what does your product development process look like?
So we always, we started Samosa Singh with the aim of being innovative only, because this snack is something which everyone knows. So if there is no innovation, there is no twist in the, the product. So we have a big NPD team in our, in Bangalore. So currently we focus majorly on the, on how to be innovative. So especially in the samosas, like we are the first one to automate the samosas, and our crust being the differentiating factor, where it's more crispier, it absorbs less oil in comparison to the other which you get on the roadside. And very soon we'll be, launching a version 2.0, where we have different fusion of varieties, Western and traditional combination of things, where we calling it as a launch platform as 2.0.
Okay. You also often call Samosa Singh India's emerging snack king. How close are you to that crown? Give us a sense of your current growth trajectory, profitability, and the scale of operations. Like you mentioned at your Bangalore manufacturing unit, what kind of daily volumes are you managing?
So in terms of, scale operation, we have about 1 acre facility in Bangalore, which we have recently opened. And we do roughly around 5 tons of material every day output on daily basis. And in terms of growth trajectory, we have been growing so far well. So we are doubling down every year in terms of the top line. And the major focus this year is going to be on the profitability, as we are inching toward that. So last year also we were EBITDA positive. So this year we are aiming to be a PAT positive company.
Sure. Your QSRs cater to both dine-in and delivery customers. How are you ensuring a consistent brand experience across physical outlets and platforms like Swiggy or Zomato? And what is the current revenue mix between online and offline channels?
See, currently we are about 50-50 revenue mix, but we intend to go more to offline channels to about a 70-80%. And in physical outlet, it's relatively easy to maintain the things, because you are in front of the customer. People take care of all the aspect. But when it comes to the online deliveries, it becomes a little challenging, because your food has to travel 5 kilometers from the stage of preparation. So we have done certain checkpoints there as well, like right kind of packaging, and how it has to be assembled, and also at the front store level, we have done certain things where, you know, we portion the product. Basically, whenever somebody has to prepare, they don't need to put their brains in that. It's a simple assembly process and the product is ready.
All right. You know, Shikhar, one final question before I let you go. You've built a strong brand recall and customer base. What's next on the horizon? Are there plans to expand internationally or expand into new food categories? Also, will you be actively looking out for funds to fuel your next phase of growth?
See, until now, our major focus was on, you know, establishing the brand in terms of operational finesse. And now going forward, we have two major focuses. First, obviously, we are going to test out in the franchisee mode to scale the brand very rapidly across the geographies. And international expansion, we have already started this year with 2 countries in UAE being already served. And so we see, you know, samosa is, you know, it's called as an international snack. It's a king of snacks. So we believe like this has no boundaries. It can go to, you know, any places in the world and being savored equally well like people do in India.
All right. On that note, we'll have to wrap up our conversation. But Shikhar, many thanks for joining us on Startup Street today and wish you the very best for all your growth plans.
Thanks a lot.
On that note, it is time for us to head into a short break. But coming up next, India's private equity and VC market rebounded to $43 billion in 2024 following 2 years of decline, according to a Bain-IVCA report and the Indian Private Equity and Venture Capital Association. We'll break down all the key highlights in our next segment, Investor Eye. Stay tuned.
Well, after 2 years of contraction, private equity and venture capital investments in India recovered in 2024, rebounding 9% year-on-year to reach about $43 billion. Now, this resurgence was primarily driven by VC and growth investments, while private equity deal-making held steady, according to a Bain-IVCA report. Now, VC and growth investments surged 40% to nearly $14 billion, and that was fueled by a sharp rise in deal volumes. India also strengthened its position as the Asia-Pacific region's second largest PE-VC destination with a 20% share of the total investments. For more such insights from the report, joining me now are Padmanabh Sinha, former chairperson IVCA and managing partner and co-founder at Launchpay Capital, as well as Aditya Shukla, partner Bain & Company. Gentlemen, thank you very much for your time here on CNBC-TV18. Aditya, to start with you, venture capital growth investments surging 40% last year. What were the key triggers, and will this trend sustain in 2025, you think?
Thanks, Ritu, for having me here. So look, I think it's been a very strong secular trend that we've seen on the VC and the growth equity investment side. Last year was 40%, but even in the years prior to that, we've seen strong growth. I think our view is that broadly, if you look at the startup and the growth equity ecosystem, the macro still continues to hold true. There are a bunch of policy reforms which have also helped the market. And there are some, fantastic companies and entrepreneurs, both in the VC and the growth equity space across different sectors, whether it's consumer, whether it's manufacturing, whether it's healthcare. So they've managed to attract, capital from different funds. So in our perspective, I think that is a trend that is here to stay and that should continue.
All right, you expect that trend to stay, but Padmanabh, India achieved record domestic fundraising as well, despite what's going on globally in terms of private equity headwinds. What made the India market resilient, and also what happens now? How will global sentiment shift towards India in light of the conflict that we're seeing?
Thank you, Ritu. As you said, the local investor base in India is now emerging as a high growth segment, albeit from a very low base. So historically, unlike countries like China, India didn't have much of a local investor base. What we are seeing is new institutions emerging. They are the ones like NIF and SIDBI. They are sort of life insurance companies, some fund of funds, and family offices, which are increasingly taking greater interest in alternatives on its asset class, which is good because they were highly underrepresented amongst Indian investors. And I think you'll continue to see that grow from a low base, particularly the more sophisticated institutional investor base grow as they seek to diversify their assets beyond traditional fixed income, public markets, etc. On the international front, I don't think hopefully the current issues are temporary. They don't matter. Private equity tends to be a very long-term asset class.
Okay. So private equity will take a long-term view and not be impacted by the current conflict. But Aditya, buyouts accounting for over half of the PE deal value. Does that to you signal a long-term shift in the fund's strategy towards control deals? Or, how do you think this might impact asset pricing and competition?
No, I think it's, I think buyouts will continue to be an important part of the market. I think part of this is that you do have growing investor confidence in the Indian market, right? And as that continues to evolve, you do have quality assets that are available from a buyout perspective. One is, I think, buyout funds have also raised larger funds either for India or, as Padmanabh mentioned, a large part of their APAC capital raising has been also deployed in India. So the dry powder exists.
Sure. Padmanabh, quickly, with public market exits also rising to 59% of exit value as per your report, and IPOs, of course, gaining traction, how does one ensure this momentum remains a reliable exit path for investors from a stakeholder and a regulatory point of view?
A good point, good question, Ritu. I think capital markets by their nature tend to be cyclical, and I don't think one should assume the resilient strategy would be to have a good mix of exit options between capital markets, trade sales, which is sales really to financial investors and other private equity investors, and strategic sales. And historically, actually, India has been fairly balanced between the three modes of exit. Of course, some of the larger deals have been exited off capital markets, either through IPOs or post. But there's bound to be some changes on that front. In fact, in this financial year itself, one of my former portfolio companies, Ather, has just broken the IPO jinx by being the first IPO of this financial year. So I don't think you'll see the same level of activity that you had on the IPO markets last year.
Yeah, well, that is always the case. But Aditya, quickly, the report highlighting aging assets, slower exit cycles for large buyouts. How are funds coping with internal return pressures, and what strategies could we see in response?
So, look, I think great question, Ritu. I think, and this is why you are seeing a surge in the exit volumes, right? I think there is, if you look at priorities for a lot of the funds, especially of the older vintages, I think there is a priority to exit, right? I think the good thing is that the Indian market now in the last 3 or 4 years has shown that we do have a very robust ecosystem, and which is the reason why you are seeing exit surge across, right? Public markets, obviously, last year was 60%, but even if I look at strategic sales or sponsor-to-sponsor sales, I think that's also been a significant part of the market. So for a lot of the funds, I think as you rightly said, they are focused on individual companies. A lot of them are actually starting that entire kind of exit or the pre-IPO process a little earlier. So definitely remains a priority, and I think it is good for the ecosystem. As you see more exits, there will be more investor confidence, and as newer funds come up and raise more capital for India, one of the big things that they really see is, has this market provided exits for the other investors? And that answer is
Well, yes. Finally, since we're running out of time, Padmana, very briefly, when you look at 2025, we're one quarter in. What do you expect to be the big themes, the big sectors? What will you watch out for in terms of private equity and venture capital trends in India?
Sure. Ritu, as I mentioned earlier, we in private equity are used to seeing long-term, beyond a quarter and a year. So I can tell you what I read of like 3-year trends based on current knowledge. So the first point I would say is India is definitely becoming a much more sophisticated and diverse market. So if you see from the Bain report itself, you have more than $40 billion of investments, more than $30 billion of sales or exits. So what's happening is across the various categories, venture, growth, buyout, you're seeing greater size and scale in India. And that allows sophisticated players which are segmented, which focus on either venture or growth or buyouts to emerge, which is great news. One last point on your previous question on exits. There's a new sort of form of exits, which is in the form of secondary funds, which is also emerging, in addition to the exits that are already there. So they are funds which are focused on providing exit or liquidity to existing private equity investors as well. And that's an additional form of exits that's emerging in India.
All right, it is Friday and it's time to take stock of all the startup deals that happened over this week. The week saw 16 deals worth $151 million. Let's take a note of some of the notable ones. B2B e-commerce platform JSW bagged $40 million from Principal Asset Management and others, while dry fruit seller Farmly raised $40 million from L Capital Asia and DSG Consumer Partners.
And that's not all. Cancer care startup Complement One filled in their pockets with $16 million from Owl Ventures, Bloom Ventures and others. Mixed reality publishing platform Flam got $14 million from RTP Global and others. Last but not the least, ice cream brand Hoko scooped in $10 million from Sauce VC and others. According to Venture Intelligence, this year saw a total of 339 deals worth $2.9 billion till date.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.